Good morning, this is Federico Bentley from Ayondo Markets giving you this morning's market update. Focusing on Greece after its crunch talks last night that carried on into the early hours of this morning. European Council President Donald Tusk has confirmed that Greece has reached a new 3-year bailout agreement with its creditors. However, he also added that the deal included strict conditions and cautioned that Greek Prime Minister Alexis Tsipras would still have to pass a new deal in Parliament. The UK 100 and the euro both rallied this morning after it was revealed that after 17 hours of negotiations, Greece had finally reached a deal with its creditors. Although the details are still sketchy, here's what we know so far. The deal will unlock 82 to 86 billion euros of funds for Greece. That's enough to keep it going for another 3 years. There will be no Grexit. European Commission President Jean-Claude Juncker made that much clear. Greece will have to transfer 50 billion euros of assets to a new fund, although it will be based in Athens rather than Luxembourg as originally mooted by the creditors, one of the sticking points of last night's talks. The proceeds of that fund will be used to recapitalise Greece's banks. The IMF will continue to be involved. The IMF's continued involvement was also disputed, but at a press conference this morning, German Chancellor Angela Merkel said the IMF's bailout programme will extend beyond 2016. This still isn't guaranteed. Greek Prime Minister Alexis Tsipras still needs to pass the proposals in Parliament. That's going to be tough, but according to Merkel, he thinks he can do it today. Greece will now need to discuss bridge financing, because it may take some time to get through the bureaucracy necessary to unlock the new funds. Greece needs to arrange 7 billion euros of financing to pay the European Central Bank money it owes in July and August. Looking at European markets, the UK 100 is up 66 points from this morning's open. The Germany 30 rolling is up just over 145 points, and the France 40 rolling is just up over 80 points in this morning's trading. Now we head over to the States, where Janet Yellen has reiterated the case for raising interest rates later this year, saying the US economy recovery has solid underpinnings and is expected to strengthen in coming years. In a speech, Yellen said the labour market in America had not yet fully recovered, and progress in lifting inflation to the 2% target had not been slower than anticipated. Employers added 223,000 jobs in June, and the unemployment rate fell to 5.3%, but wages were stagnant. And on Wednesday and Thursday, Twitch traders will yet again be on tenterhooks as Federal Reserve Chair Janet Yellen delivers testimonies to politicians in Washington, and any signal from her, real or imagined, on the direction of US interest rates will doubtless spark fevered market activities. This coming week brings earnings from many of the country's biggest companies, including Google, Netflix, Goldman Sachs, JP Morgan Chase, and Johnson & Johnson. At a time when valuations of some US stocks are considered expensive, some reassurance and prospects for US company shares would be welcomed by nervous investors. Now for some news this week in China, the country's leaders have intervened in their stock markets using extraordinary measures to shore up share prices. Volatile Chinese equities fell more than 30% in recent weeks before recovering some ground late last week after Chinese regulators banned investors with large shareholdings from selling their stocks. Will Beijing's double or quits bluff end in tears? Will China's leaders now go all in to save their stock markets from tanking? Thursday brings a big interest rate decision from the ECB and a second day of testimony from Federal Reserve Chair Janet Yellen, this time to the US Senate Banking Committee. That's all for today's news, so thank you very much for listening and tune in for tomorrow. Thank you.